Hello, everyone. Welcome to this week's weekly market view for Monday, the 1st of January to the 5th of January, 2024. My name is Vishal. Let's get started. All right, so we are going to start off with the yearly chart of the Nifty. So we'll just try and see how the year for the Nifty has ended since today is the 1st of January, 2024. So pretty much we have a yearly candle close now, which is a very, very interesting setup because here you can see that a new rally-based rally has been created on the yearly chart of the Nifty. You can mark it wick to wick. So this is your rally-based rally. So if the market does eventually correct and it comes around 18,800 for some reason or the other, then it's more or less likely to react to this yearly level of demand. If you go on to the quarterly chart now, maybe even the half yearly chart. So there is this demand level over here, which is this rally-based rally. And then on the quarterly chart, you also have a level of demand, which is situated over here, which is this new rally-based rally as well. So a lot of demand zones right now indicating that the market is indeed bullish. Nothing on the higher time frames indicating any kind of bearishness. If there's any kind of bearishness, it's going to be more or less just profit booking as of now. Let's move on to the monthly chart now and see how the monthly candle has closed. So monthly candle indeed has closed extremely bullish. So any pullback will be indicating more buying. 19,844 to 18,826 is your monthly level of demand. Let's move on to the weekly chart. On the weekly chart, we do have this rally-based rally. And if we look at it very, very closely, this is going to be your closest level of demand now that the week has closed and we have a close about this candle. So 21,437 to 20,985 is the closest level of demand from current market price. If we go on to the daily chart now, and this is our most recent daily chart. So we made a new high and now markets are consolidating. So this is going to be your closest level of demand on the daily chart, which is this rally-based rally. And of course, you have plenty of demand zones on the smaller time frames as well. So you have this one level over here. And the reason that I would like to mark this level over here on the chart is also because of the fact that we have this level right here where this supply zone, which was a very, very strong supply zone, got violated. So this could be a level of importance in case if the market does come back over here. So 21,453 to 21,365 on the 75-minute chart. Let's move on to the next index, which is Bank Nifty. So let's go on to the Bank Nifty chart. Just load Nifty Bank here. And let us see how Bank Nifty is doing on the higher time frames. So let's wait till all the charts load. Let us first start with the yearly chart on Bank Nifty. So Bank Nifty has also closed extremely bullish on the yearly chart. We see this strong yearly candle. We do not need to worry about it too much as of now. We do have this rally-based rally level of demand now. And 35,300 on the yearly. If we go to the half-yearly chart, pretty much the level is even more clearer on the half-yearly chart, situated around 35,853 to 29,743. And you don't need to keep doing this always. This is just once a year that you want to just know where the levels are on or with respect to the higher time frames. On the quarterly chart, we have this level which is tested once, could test again. So a little far away from current market price right now. And if we go on to the monthly chart, so let's look at the monthly chart now. And just like all the other indices, we have a new level of monthly demand as well, which is this drop base rally in price. Look how the prices initially showed that they wanted to come and correct towards this level of demand, but the prices were unable to do that, and then we had a strong buying pressure. So this can be a good level of demand in case of prices push down to this level. Also, more or less lining up with the 44,500 round number. So key area on the Bank Nifty on the monthly chart. If you go into the weekly chart, we do have this weekly level of demand now, which is more or less made itself very, very clear. 43,946 to 43,243. And on the daily chart, let's have a quick look. So on the daily chart, we are more or less leaning against this tested level of demand. Now we want a little bit of a push to the upside for a new level of demand to create, and maybe then this level of demand can also be acting as a good support for the market, which is 47,800 to 47,389. So the market pulls back to this area, we might continue the move to the upside. No clear levels of supply formed yet on this index, and on the smaller time frame chart, you have the 75-minute level of demand, which is far away from current market price. And then you also have, pretty much this area is also key now, which is 46,720 to 46,506. So these are the key levels. Should not be looking at shorting both Nifty and Bank Nifty as of now. So focus on pullbacks, focus on retracements to initiate long trades as of now. Let's move on to the next index, which is the Nifty Financial Services, also known as the Fin Nifty. And let us see how this chart also looks with the higher time frame perspective. So let's start with the yearly chart on the Nifty Financial Services. Now, of course, this is relatively the movement, etc. is a little similar to the Bank Nifty movement. So just let me remove the tools here. Let's make the chart look nice and clear. Yeah. So pretty much this is what we see right now. Now we do have this rally in this base and this new rally in price, 19,000 level, pretty big base. Let's move on to the half yearly chart. On the half yearly chart, the level is a lot more clearer. So this level looks much, much better. 17,739 to 14,376. If you go to the quarterly chart, it's more or less lining up with that same level on the quarterly chart, this rally base rally, 19,000 to 17,204. And if we look to the monthly chart now, on the monthly chart, very similar to the Bank Nifty, we have created this new level of demand. Okay, so this drop base rally is going to be a key area of demand in case if markets do correct, 19,804 to 18,859 on the Nifty Financial Services. On the daily chart, on the weekly chart, very similar. We have this new rally base. Now, this is going to be a key level in case if market does pull back, 19,826 to 19,385. And if we move on to the daily chart, let's see if we have any level closer to current market price. We don't have any level, but this is the level which last played out. So this is going to be a key area, 21,021 to 20,912. Any break below this area would probably call for more bearishness. But right now, as we see, market is trending strong. So any pullback is going to be a good buying opportunity on all the indices. Let's now move on to the USD INR. Let's move on to this pair now. Let us see what the USD INR is telling us based on the higher time frames. Okay, so let's start with the yearly chart on the USD INR. So yearly chart is pretty clear, pretty positive. As of now, you have this entire rally-based rally level of demand, which is over here. Let's move on to the half yearly chart. On the half yearly chart, this level is even more clear. It's rally-based rally demand. So any pullback 75, 75, 72, 31. And then let's move on to the quarterly chart. So quarterly chart is more or less very similar to the half yearly chart. This entire level of demand, same level. Let's move on to the monthly chart. On the monthly chart, we do have this rally-based rally of demand, and somehow markets are struggling to push to the upside. They did try to push once, try to get out of this consolidation, and now there is another consolidation which is happening at current market price based on the monthly chart. Let's move on to the weekly chart to see if there is any interesting level being created here. So after the markets did break this resistance level, uh, they are trying to sustain above this resistance, but failing. And now because there is this new level created over here, it's going to be interesting to see whether the market is able to take this level or break this level to the upside, or then react from this level and start moving strongly to the downside. The clear and the most nearest level of demand right now on the weekly chart is going to be this level over here. So this is your key level 80 to 79.06. Let's move on to the daily chart now. Let us see what we are seeing on the daily chart. So on the daily chart, we do have this pro gap. And probably this is what is going to be a more of an obstacle right now for the USD INR to push to the upside. And then we also have this level, which is a little bit in the middle, but it's still a fairly reasonable level. And this is the price from, this is the exact level of demand from where the prices have started to move to the upside, breaking all the prior supply zones as well. Okay, so 83.37 to 83.43 and 82.33 to 82.70 will be the key levels to watch out for the USD INR. All right, now we are going to slightly shift from the USD INR to some heavyweights, and taking into consideration the month of January, we are going to have a few stocks which are going to be announcing their earnings. It will be interesting to see how these stocks are going to react. So let's quickly have a look at Infosys, and let's try and see how Infosys looks with respect to the current scenario. So let's start off with the monthly chart on Infosys. So if we look on at the monthly chart on Infosys right now, we do not have anything clearer right now. Markets are just reacting to this level right below over here, and trying to push up, trying to create, let's say, some new levels of demand. If you go on to the weekly chart, we do have some key levels of supply on the weekly. Yeah. So in fact, we are in a weekly level of supply. It's a tested level. And we had one reaction from this level. Now we have a new level of supply, which is to which the price is currently reacting. Okay. Now you just got to be a little careful because the markets have printed a low and markets are trying to push to the upside. Any break above this level will probably force for more bullishness. But as of now, prices are in a higher time frame supply zone. Okay. Now, if we closely look at, let's say, where is Infosys likely to move, it might push a little bit more deeper to the upside. So we have our daily chart, and we do have this gap level over here. So it'll be interesting to see in case if earnings pushes the price straight towards this level, then will markets be able to print a new high? Okay, so keep a close watch at 1463, 1434. More or less, this level is either likely to hit as results approach, or it can even probably trigger after the earnings come. And we could possibly see the markets inching towards these highs. Okay, so 1463 to 1434 is a key level on the daily chart of Infosys. Let's look at one more heavyweight, and let's also have a look at TCS. These are going to be the two IT heavyweights. So for this week, we will try and focus on the IT sector. And let's look at the stocks from within the IT sector. So this is TCS for you. So let's quickly have a look at TCS. Let's wait for the charts to load. So TCS is comparatively a little stronger than Infosys, as the chart suggests. And if you look at let's look at the monthly chart first. So on the monthly chart, we are coming closer towards, I believe these are the all-time highs on TCS. So it'll be interesting to see how TCS reacts towards these areas over here. There's going to be a little bit of a resistance for TCS. A clear break above this level will definitely push TCS to the upside. Here we are into this area right now, which is this rally-based drop. Markets have come here once. We are revisiting this level. Let's move on to the daily chart. So markets did react to this level of supply. Now the supply zone has got violated. And now more or less seems like TCS might even try and play a little bit of a range-bound market situation. Okay, so just like how Infosys has that daily level of demand, TCS also has a level of demand. And any options traders who are looking to plan earnings trades or earnings-based trades can possibly look for a non-directional opportunity in TCS, taking into consideration 39993 as a key level and 4045 at supply, and 3631 to 3569 as a level of demand. So this is pretty much from my side. I hope you all have a wonderful 2024. So wishing you all once again a very, very happy new year, and looking forward to see you all next week. I hope you all enjoyed the analysis. If you do like our analysis, do mention in the comments what you like about the analysis. And if you're still not a Sher Khan Education YouTube channel subscriber, then do hit the subscription button and become a part of our channel to receive more videos like these every week. Take care, everybody. Have a lovely week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.